Joining me now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, good to see you. Thank you so much for being here this morning. Whoa, take us through this week. What the heck happened and why are we seeing this bounce back this morning? Is it sustainable?
I think it is sustainable. What happened over the weekend? We had a bunch of hedge funds that are involved in this yen carry trade. It's like a bunch of hedge funds trying to get something for nothing. The yen strengthened. Basically, they blew up, and the VIX got out of control. Not because we're all, trading all day long, but the VIX is priced in S&P 500 options. So when you have a bunch of hedge funds trying to get out, they don't have liquidity. It's causing the calculation of the VIX to skyrocket. I mean, it was a weird day. It took me till about midnight on Monday to really figure out what was going on. But I was a buyer that day. Remember, we didn't even get a 10% correction in the S&P. We're not going to get some Fed cuts that are going to be emergency or something like that. The economy is basically slowing down. And what's really happening outside of, AI is going to take a little time is people no longer feel because of the Kamala Harris thing that Trump is an absolute shoo-in. And so we're repricing that risk. But honestly, what's wrong with the little summer blow-off? I think this is all overblown. I think Monday was an opportunity to buy.
Yeah, I mean, look, Adam, jump in here because it really did start in Japan, right? I mean, the central bank there talking about, raising rates further after raising rates at the end of July. Now they had to walk that back because it created such market uncertainty.
Right.
And look at the Treasury yield this morning, the 10-year, still below 4%, even though we're seeing a rally in yields up almost 5 basis points on the 10-year.
Well, what we saw is it was just a total freakout on Monday. I mean, Monday morning, Coinbase, I own Coinbase, it opened down 22%. At 9:30, it was down 22%. By 9:37, it was only down 6%. Think of that. So, there were all these dislocations as people tried to respond in the moment. I think that's a loud and clear message to our viewers and retail investors. Just take it easy. Don't
relax.
Overreact in the moment.
Well, but look, you've got all these expectations now about what the Fed is going to do, right? I mean, is the Fed going to come in, have an emergency meeting, start cutting? And we were all expecting a 50 basis point. I'm sorry, we were expecting a cut in September. Now it's all the way up where we're going to get a 50 basis point. Is it 75? Goldman Sachs CEO David Solomon is predicting that the Fed will not do any emergency rate cuts. Despite this weak jobs report last month, Bank of Japan walks back its talks of raising interest rates, saying it's not going to tighten when markets are unstable. So, Lee, what do you do here then? You're saying it was an overreaction. You want to buy stocks. Where specifically?
So look at what was happening a couple weeks ago. You get smaller companies, you get defensives, you get cyclicals, you get banks, healthcare. All of those were starting to have this massive rally in early July because of the idea of Fed cuts. And this all has to do with their balance sheets and having less, debt service and all that stuff. So if you just look at small markets, they had this massive 10% surge and they gave it all back over the last week. So I want to get back in that trade and I want to be barbelled with smaller, cheaper companies, but I don't want to fade the Mag 7 because even though AI is going to take a little longer, they're making a huge amount of cash. So you have your small value, which some people think is old economy, sleepy stuff that's going to do well on Fed cuts, and then you have your secular growth story. So I was just in there Monday just buying index funds. I wasn't even messing around with individual stocks. I just want to get big exposure, and I think that we'll probably see some volatility up into the election. But listen, we're going to have a good year next year. The Fed's going to start cutting later this year. I don't buy September. I think it's going to be after the election. Please. They're going to overshoot this thing before they cut. They're going to cut a little too late, in our opinion. And that's how it works. Wow. So I think you start buying and you wait for the Fed to take a little bit of time. People will freak out one more time. You lock and load and you make money in 2025. It's not hard.
Well, what about earnings? I mean, how would you characterize earnings so far? Adam, we're waiting on Disney to report any moment here. Second quarter earnings out. It also announced price hikes for the streaming platforms by up to 25%. Gains, they are raising prices by up to 25% for Hulu, Disney Plus, ESPN, starting in mid-October, pushing customers toward the bundle plans. Let me tell you, that's inflation, Adam, right there.
Oh, you better believe it's inflation. As a matter of fact, one of my clients from Dubai took his 3 daughters on a Disney cruise, and he pinged me because he knows that we own Disney, and he said, you can't imagine the prices I'm paying on this cruise for everything, and they just keep charging for this and that. You know, you got to have this dress, and you got to have that, right?
Yeah.
But that's one of the reasons why we own it. People will get into the Disney ecosystem, and you don't want to leave.
Yeah, but I'm wondering if that's a specific situation with, Disney World and all of that, the loyalty of that brand. Lee, I'm talking about it just from an inflation standpoint. You see Disney raising prices in terms of their streaming businesses by up to 25%. These are some of the things that people complain about because they're paying so much higher in price for so many services and essentials right now still.
Yeah, first of all, these price hikes, we'll see how those bundles work. I was in Disney last week. I do not celebrate my daughter Zoe's 16th birthday. It's a money extraction machine. I don't think the consumer can handle it. They had to shut down. So listen, parks are always going to do well. I always have wanted to buy parks as a standalone business.
Okay.
But the streaming business takes billions and billions and billions a quarter to make almost nothing. And the fact that they have to raise prices, I'm not sure the consumer is going to take it. I'm not sure, just like Pepsi is having problems passing along to the consumer, just like all this summer, I think there's a limit to what the consumer can do. And I think this is just another example about how the middle class is getting completely squeezed. And that's where I think you see weakness.
All right, we will leave it there. Lee, great to catch up with you. We so appreciate your time and insights here. Lee Munson joining us.